to critically analyze this question really of mining for development is by asking whether mining is developing Africa. And my answer, I'll tell you right up front, is it has in the past. It can. Mining can develop Africa, but it can also do the opposite. And I think Carly gave us a preview of what that could mean in general. So to answer this question, let's go to an obvious place, a very well-known center of learning. I thought we could start at Timbuktu. Particularly because when I lectured for a while in African politics at Macquarie University, I occasionally came across students that thought that Timbuktu was in Australia. So not that you think that. The Australian mining interests in Mali have increased dramatically since then, when I was lecturing around 2005, and that's part of the story that I'm going to tell tonight. I thought it was a good place to start, just to make the point that that mining is not new and that empires have been built upon it. The ancient kingdom of Mali was built upon gold, the trade of gold from the south in West Africa with salt. And before the discovery of the New World, most of the gold in Europe came from West Africa. I put in this beautiful 14th century Italian map of West Africa because it includes a very European perception of what Emperor Mansa Musa of Mali looked like. I'm sure he looked nothing like that, particularly his golden crown. But the interesting thing about him, when he went on the Hajj to Mecca in 1324, he apparently took so much gold with him and gave it out as gifts that when he gave out gifts of gold in Cairo, the gold market there, the price of gold crashed. For about 10 years it took to recover after Mansa Musa had been through on his way to Mecca. So mining is not new in Africa. It's some of the most ancient mines have been discovered there, and in Swaziland, for example, or northern Limpopo in South Africa. And it sometimes led to development, but the trajectory can go the other way, and that's why I've mentioned Timbuktu, because tragically this year some of those antiquities, the ancient manuscripts of the University of Timbuktu, have been sacked and destroyed in the rebellion from the north, and that's going on, at the moment. And in between Mansa Musa and 2012, actually since the mid-1990s, democratic reforms in Mali have really led to very, very positive development, stabilization of the politics, and then mining investment, particularly in gold. And there were some 20 ASX-listed Australian mining companies with interests in Mali. Some of the miners were trapped in March this year when the coup d'etat took place. And so really it's a cautionary tale that this is mining in an extremely high-risk environment. But the political risks are great, and you can never be secure about developmental gains, unfortunately. Today, Zambia and Ghana are held up as developmental, countries that are models of development in Africa at the moment. But if you went back to the 1980s and said, what are the two countries in West Africa and Southern Africa that are models for development, it would probably have been Ivory Coast in West Africa and Zimbabwe in Southern Africa. So things change, and they change very quickly. So let's go to another place to answer this question. I'll take you to my hometown of Cape Town, which doesn't have much in terms of rocks apart from Table Mountain sandstone. But mining is developing our tourist industry and our conferencing industry. This is the Mining Indaba that takes place in Cape Town in February each year. And it's a good place to get a sense of whether mining is developing Africa, because it brings together some 6,000 delegates, so that's 3 times the size of the Africa Down Under conference that takes place in Perth in August, which is also a big conference, mining investment conference. And And it's like when you go through the convention centre and you see mining companies and you see African governments all jostling to meet each other and do business, it's like a sort of speed dating convention on a grand scale. And there's a Canadian corner, there's an Australian corner, there's a coffee setup where you have to register your meeting before you can go and have access to the coffee corner that the Australians run, it's really like a massive networking event, it's growing every year. It gives you a sense of the mining boom in Africa in the past 10 years, and it gives you a sense of why it's been called actually the new scramble for Africa's resources. With all the connotations that has, I think that discourse, new scramble, has connotations of plunder and exploitation, and we'll unpack that critically, I think, because one needs to. But that's the antithesis of development, this idea that it's a scramble, it's another scramble for Africa's resources. On the fringes of the mining Indaba, there's something they've provocatively called themselves the alternative mining Indaba with a capital N in the middle. It's NGOs and it's faith-based organizations, both Muslim and Christian, who come from all over Africa, but only a couple of hundred that question development and mining. And I think it's important to note those voices of civil society and communities in particular, that are on the fringes, and part of their message is that there's not a lot of talk about development going on inside the main convention centre, and if there is, it's slightly stage managed compared to the types of issues that are raised at this other meeting that's a lot cheaper to attend. So I've been to that one a few times, and only once to the mining Indaba itself, but yeah, their posters are saying just mining or just profits, and they're questioning the connection between mining and development, or is it a scramble? The new scramble really is driven by exactly the same global economic changes that have fueled the mining boom and growth in Australia for the last 10 years. It's the rise of China and India, the demand for iron ore, coal, copper, bauxite, uranium, and also the rise of commodities prices, and particularly the rise of the gold price as a result particularly of global insecurities around the financial crisis. So those are the same things that are driving the mining boom, and there's quite a lot of parallels in the economic fortunes of Australia and Africa because of this. A good example of that is the 2008 global financial crisis, where the resource-rich African countries actually bounced back very quickly and didn't do too badly. Some did worse than others depending on the particular commodity that was their primary export. For example, Botswana did quite badly because the diamond price dropped dramatically. But each country is more or less recovered very, very quickly. They're far more badly affected in other ways by the crisis in the Eurozone from last year, but I'll come to that. I just want to distinguish when we talk about the scramble for resources. Another quite negative discourse about extractive industries is the resource curse literature. Carly alluded to it, talking about distortions of economies and so on, but I do want to distinguish between two stories of the new scramble in Africa. The one is the scramble for oil, and it's a particularly intense scramble that has to do with geostrategic interests in a finite resource that's really is of great strategic importance versus other mining for other minerals. And I think that the effects one should disaggregate the different commodities when you talk about a resource curse. And this is a project that our director Salim Ali is very interested in, is saying, let's break down the resource curse into how do different commodities have different impacts on development, or the opposite, economic distortions or political distortions to national economies and local communities. The differences between oil and mining in Africa is that so far most of the oil that has been extracted in Africa has been offshore. Recent discoveries, a lot have been in the West African Gulf, which is most of which is offshore, so it has fewer impacts on local communities, and there are fewer opportunities for corporate social responsibility programs and benefits for host communities and local economies. But let's go back to the new scramble discourse and try to say what's, is this career or is mining developmental? Can it lead to development? So let's just look back at the original scramble for Africa and say what has changed. The original scramble, of course, referred to the colonial dividing up of Africa. This is where the straight lines on the map came from, the fact that they were drawn on a map in Europe. Many of these borders and bore little relation to the actual patterns of settlement in Africa. At that Berlin conference of 1884. What's changed, one of the obvious things is that China is not at this table, nor are India, Brazil, so the BRICS countries. And then Canada, Australia, also major investors in African mining in the last 10 years. The map on the left, I wanted to show you briefly, is just a map of the railways during the colonial era. And it's interesting because many of these railways are now being rehabilitated by mining companies now and termed development corridors, actually. So, yes, the infrastructure is a critical part of Africa's development. But the thing that's often noted in lectures about colonial history in Africa is that the railways ran from the mining areas, the mineral-rich areas, to the coasts, and they were designed to export Africa's riches to Europe. This is today still a barrier to African regional integration and trade between African countries. There's a lack of interconnecting roads and rail networks, with the exception of South Africa, which you can see at the bottom, where there's very dense network developed for the settler society. So rehabilitation of some of these railways is a feature of new mining contracts. Infrastructure is built by mining companies in public-private partnerships. And they allow, as part of the contracts in many places, they will allow public access either during the life of the mine or once the mine has been closed. Then the ownership passes to the government. So that's seen as a developmental gift. So some examples of this are the line from Tet, the big coal reserves in northwest Mozambique, to the coast of Mozambique, which Vale is involved in constructing. The Benguela Railway, which runs right from the copper belt of Zambia and the Democratic Republic of Congo, Katanga, through, so it goes from the DRC through Zambia and through Angola. And this was originally completed in 1922, I think, and exported a lot of the copper from Zambia and Katanga to Europe via Angola. Much of this was destroyed during the wars in the DRC and Angola, and there's talk now about rehabilitating it and moves underway to rehabilitate it. Of course, the line is now having to run both east and west because exports are going to Asia, India, China, and to Europe and the United States. So the current project is actually right across, cuts across from Angola all the way to Mozambique across the copper belt. And then in Guinea, Rio Tinto is involved in, has plans to pay for the construction of a 700-kilometer railway from its Simandu iron ore mine to Conakry. In Liberia, there are plans to restore the rail to the Buchanan port, also for iron ore transportation. So these are many projects that are being redeveloped. And my point really, to go back to the colonial history, was just to say that these public-private partnerships for infrastructure that are related to transporting mines, ores and coal are important, but they're not always the right infrastructure in the right place. So they're no substitute really for public spending on public infrastructure, and there the revenues of mining have to be well spent by the national governments. There's no way of getting around that. And a final point on that is just that a road is a better development tool for Joe Public than a railway line. So let's move to Australia. And last year in October, so exactly a year ago, 25th of October 2011, the Prime Minister, Julia Gillard, launched the Mining for Development program at the CHOGM conference in Perth. And also last year, Kevin Rudd, this was in January 2011, was in Addis Ababa in Ethiopia, where he committed Australian support for the African Mining Vision, which is a document that's a plan that's been developed by the African Union and the UN Economic Commission for Africa to precisely address some of the development issues around mining for Africa. I think that both of these commitments to mining development in the developing world, which has a big African component, and also the commitment of a greater amount of overseas direct assistance to Africa from Australia, marked quite a shift in Australian development policy towards Africa, and it was following the growing economic interests in mining in Africa, which have really grown at a remarkable pace since around about 2005. This assistance to Africa was really timely in 2011 and very welcome, because as I said before, the euro crisis has threatened ODA from Europe. And to put that in perspective, of the OECD international development assistance, about 42% goes to Africa, and of that, half is from the European Union. So by Australia focusing more on Africa than it has in say in the 1990s to 2000 or so, this is going to at least fill some gaps. Of course, it is following Australian national economic interests. It's not a sudden rush of philanthropy, but I think the pace of Australian I think it's sending a message that at least where Australia has economic interests, it also has responsibilities, and that's an important factor. Of course, the aim is for mining revenues to replace donor dependence in Africa, although this doesn't always have developmental results. It's certainly happening in many countries that are, for example, Angola has so much oil revenue now that it doesn't need ODA at all. But another example, that's an oil example, unfortunately I couldn't think of a mining example, but Uganda, since discovering oil, has raised its military spending above the 2% of GDP cap that the donor conditionalities imposed on Uganda. So that's just an example of where revenues are coming in from the extractive industries. It allows bad governments actually to spend more money on weapons, and they've already done it in Uganda. I wanted to mention just two examples of Australian investments. These were chosen really at random because, as you can see on the left there, Australia has 200 companies working in 650 projects in 37 countries. So it's really broad and a whole range of majors and smaller companies. Rio Tinto has iron ore, coal and uranium projects all over. It owns the Rossing uranium mine in Namibia, which is a very significant exporter of uranium in the world. And it's had, like the troubles in Mali, Guinea has been a real headache for Rio Tinto. There was a coup d'etat there in 2009, I think it was, or possibly 2008, but things have settled down since then. There's been an election, and I think Rio Tinto has managed to secure its, as much as a contract can be secured in Guinea, has managed to secure that contract. And that's the mine, which is particularly in a particularly picturesque place, a real blot on the horizon there in Guinea. But I thought I'd show you that picture. The Paladin Energy, who were at the mining, the Africa Down Under conference in August that I attended, I brought them out as an example because although they're a very small company, and they're employing only 450 local workers of a total workforce of about 550. That is actually, the uranium mine is predicted to, at the height of its production, it's going to contribute 10% of the GDP of Malawi. So it shows the effect that this can have on Malawi is a particularly small, poor country with very few other mineral resources, but it shows the effect that mining can have on the GDP of a country. So to conclude, you can't have a lecture from a South African about mining and development without mentioning this elephant in the room. The terrible labour relations in mining in South Africa and the legacy of an unjust economy and society that was built on mining, in fact. But I think the only good thing one can say about this disaster this year and the massacre of workers in September is that you can't generalize from South Africa's terrible labour relations and history and perceptions of exploitation, because it's often perceptions that people are being exploited that drives conflict, and also perceptions of inequality. You can't generalize that to the rest of Africa. It really is an exceptional case, I think. The lesson from South Africa also is that mining cannot take place in isolation from host societies or communities. And I think companies that realize this are obviously mining very differently to the 19th century model. The obvious difference also between the old scramble and the new scramble is that now revenues are paid to independent, mostly elected African governments. And the development debate now is really on how to assist these states to build their capacity and to build their institutions to manage and spend the mining revenues wisely and well. And that's really where the developmental challenge comes from, or the heart of it. And I think as the Chinese economy has slowed down this year, Africans are as aware as Australians are really that this mining boom that has had a very significant effect on the GDP of many countries is a windfall. It won't go on forever. And the opportunity must be used to jumpstart other areas of their economies. Final positive note amidst some of the gloomy stuff that I've shown you is that the human development indicators are improving in some of the mining countries where they seem to be getting it right, and that's in Zambia and Ghana in particular. So I'll leave it there. Thank you.